It is Thursday, March 2nd, 2017. It's 8:49 in Hawaii, 1:49 in New York. Just want to make a quick video going over our JNUG trade. I lost 30k today, 29,400, something like that. I want to reflect on the trade, how it came to be, and what we can learn from it. I believe it was a classic case of revenge trading. My thesis for the beginning of the year was that the market was underpricing the probability of a March rate hike, and so I wanted to short miners. Whenever there was an opportunity, I thought it makes sense to short miners. I was surprised how consistently strong gold has been all year, and even recently, now the probability of a hike is up to 75%, up from it was like at 10% at some point. Up until like the last couple of days, there was not even any weakness in gold. It was very, very surprising to me how well gold was holding up, and miners started to show weakness late as well. So that surprised me, and that is where it all began, because before today I only had two losing trades, and that was two plays I shorted miners. One was dust, the other one was JDust, and it was here in this time frame where gold kept on going higher, and miners refused to sell off yet. So, and then obviously miners did tank, and I missed that one, and that is when the revenge trading part came into play. Let me go into the GDXJ chart here, the short-term one. Oh yeah, this day here, this is where it started. I was waiting for another entry short miners, but I have a rule, and if there is no major news event or not a major catalyst, or if the risk reward is not like really out of this world, I don't want to open a new position before 3 p.m. Eastern time. This year was 7 o'clock my time, which makes it noon in New York. All of a sudden, miners start to tank, and I was hesitant, and I wanted to send out a herd alert right here. I was already pissed at myself that I didn't jump in right away, but I was hesitant. I didn't want to jump in too early, and then I became hesitant, and I jumped in not at all, because when I was ready to send out the alert, all of a sudden it takes the next leg lower, and I was okay, there's no way I can jump in now. I missed the boat, so I didn't trade take the trade at all. I missed this move, and in JDust it was like a 30% move or something like that, right? A massive move, and I missed it. I was pretty upset, because that was my theme for the first few months of the year, and when it finally occurred, I wasn't in it, so that was not good for my psyche. So what happened then? Then I thought, okay, since I missed that big move, I now need to wait for the reversal. So here on Tuesday, I sent out a herd alert that if we were to sell off into the close, we would take a long position, because I thought there needed to be more pain. That sell-off did not occur yesterday, and it did not on Tuesday, and it did not occur on Wednesday. So this is number 2 of the errors here, and here we did make a new low, but it was not much more pain than we saw here. And here all of a sudden there comes some volume in, and miners take off. If I had been in the right mindset, I would not have taken this shot. After the fact, it becomes evident to me that, okay, this is just another little intermediate rally to suck in some more bulls and shake those out even more to get the next leg lower. And I was just not open to see it. And having in mind the recent move down here, where I was too hesitant, here I was exactly the opposite, and I chased it. I violated my 3 p.m. rule here, because I should have done it there. bought it here, got kind of bailed out. I bought it here like at 1:15 or so Eastern time. Got kind of bailed out because we pretty much at 3 p.m. we were at the back at the same level. But we did not even make a new high. So there was still no evidence that the reversal was in there. So I mean, it's a marginal trade that you can take. But if it then does not happen the next day, you need to be aware and need to get out. And that is where I make mistake number 3. Because if we compare the price action of gold relative to GDXJ today, I actually saw it. I saw between 5 o'clock and 6 o'clock my time, so between 11 and noon Eastern here. This is where I should have bailed. Here we see a $4 move from gold in gold from 1238 to 42, and during the same time here, miners go sideways to lower. That is the picture perfect example of relative weakness, and it should have told me miners are not ready to go higher. There is another leg south. I failed to recognize that, and I had to pay for it. There was another leg south. There was no way that I could hold on to the position. I know Yellen talks tomorrow, and my entire thesis was that Yellen would make it evident for everybody to see that we will get a rate hike. So I do not want to be long gold on Friday when she talks. So there was only today to get this bounce, and I was just too late to recognize it. And it was, in a sense, I'm happy that it happened. I mean, it sounds weird, but every time I make a mistake, I appreciate it because I can put it in the books, and with every mistake I become a better trader. So I'm now aware what I did wrong, so I'm not going to do it again. What was very interesting here, if we look at what happened to silver today, silver all year was just grinding higher, right? No volatility, it's slow grind higher, and then all of a sudden it tanks like, I don't know, it was probably some Fed pundit yapping, and that tells me the market is not anticipating news anymore. It waits until the news comes out and then prices it in like all of a sudden, like overnight. What triggered that GDXJ sell-off the other day, the 10% sell-off, the initial sell-off that I missed on Monday? I am not sure what triggered it, but that all of a sudden those kind of moves happen tells me the market is in a very weird kind of stage, and I wouldn't be surprised if we could see something similar tomorrow when Yellen talks, because I mean, to me it's so evident that the Fed will hike, but it was evident like weeks ago. So I'm very surprised that the market doesn't anticipate these kind of news events and waits until the last minute. So that also tells me I don't know how safe this market is. I mean, I've been bullish since the election, but this is worrisome. But it also provides opportunities. So we know that this market can be calm and then overnight or like within a few minutes change its mind and move significantly. So I believe the market is very vulnerable now, and it's just waiting for a catalyst to do exactly that, what GDXJ has done, what silver has done. That the news was pretty much, to me it was so evident out there, it still did not price it in. So I am expecting the same to happen for the market at some point. We just need the catalyst, and may it be China, a trade war situation, the border tax, because there is some sort of border tax coming. And I'm surprised the market is not anticipating it, because if you read between the lines what the Donald is saying and what pretty much every CEO that goes to the microphone after they have met with him at the White House, what they're complaining about, it is about currencies, it's about intellectual property. To me, it screams China. I do not think that Donald will play nice with China. I think the market is totally underestimating that risk. But we cannot anticipate the move because the market doesn't work that way right now. It's not seeing it coming. Maybe it is seeing it coming. It's just not reacting to it yet. So we wait until we get some sort of news, and then we need to pounce and need to be ready to pounce. So for now, we stay on the sidelines. We wait for our next signal, and most important thing is don't follow a revenge trade with another one. We don't want to compound our mistakes. So it's important that the next one is well thought out and well timed.